The day has finally arrived. It's UK election day, and everyone will be wanting to know if those poll results were accurate this time round, with so much hanging in the balance. And yet, the reality is this. Whatever the outcome, we see the most critical downside risk associated with the pound as having been put to rest, with that no-deal, disorderly Brexit risk no longer a credible threat. While there will still be uncertainty going forward, even in the event of the priced-in ruling party majority victory, it shouldn't be anything close to the dramatic sterling downside risk associated with that tail risk of disorderly Brexit. While we sit back and wait for the results, we thought it would be a good idea to highlight some of the important levels to pay attention to in the cable rate. At the moment, the pound has rallied to its highest level against the buck since March, staring at a retest of the 2019 high from early March at 133.82. While the ruling party majority result has been priced in a good deal, confirmation of this result will likely open a quick retest and possible breach of that yearly high. At the same time, with daily technical studies already extended, we anticipate the market having a hard time extending much beyond the 135 area in the shorter term to allow for what would then be severely extended studies time to unwind. Fundamentally, this could coincide with a run-up on the confirmation and a subsequent sell the fact as the market then looks ahead to the next set of worry, albeit what should be a more manageable set of worry. Looking up beyond the yearly high, we have that mentioned psychological barrier at 135, which guards against the next meaningful level of resistance in the form of the multi-month high from September of 2017 at 136.58. As far as levels of support go, we'd first highlight the 130 barrier as an important psychological level that's also a previous resistance turned support zone. Below there is the more critical level of support, representing the consolidation low after the market exploded higher in October, with that consolidation low coming in at 127.68. But ultimately, whatever the outcome, our outlook remains highly constructive of the pound, with only a clear break back below 125 to compromise this outlook. It's also important to highlight the other factors supporting the pound away from UK domestic fundamentals. These are this latest dovish-leaning Fed policy communication, a communication that has interest rate differentials moving in the pound's favor, and a pound that looks attractive as the only major currency in trade wars that isn't motivated to be looking to play the game of weakest currency. That's all for now.